The Peter Schiff Show.
Today's podcast is sponsored by NetSuite, the easy-to-use cloud-based business management software for every aspect of your business. By popular demand, NetSuite has extended its one-of-a-kind flexible finance program for a few more weeks. Head to netsuite.com/gold. Today's podcast is also sponsored by Harry's. Right now, you can get a 5-blade razor, weighted handle, foaming shave gel, and a travel cover for just $3 at harrys.com/gold. Hi, everybody. It's another Sunday live Peter Schiff Show podcast. I want to start out by wishing all of the mothers who listen to the podcast a happy Mother's Day. Although I know that the demographic of my audience skews very heavily male. So not that many mothers percentage-wise probably listening. So guys, you could wish your mothers and your wives a happy Mother's Day on behalf of Peter Schiff and the Peter Schiff Show podcast. It was a relatively quiet week, economic data-wise, not much going on, but there were a couple of releases later in the week on Thursday and Friday that further support my stagflation analysis or assessment of the U.S. economy. One was the weekly jobless claims, which really spiked up in the most recent week. And I've always, looked at these numbers with a lot of skepticism because there's lots of layoffs that are constantly being announced every week. Yet for some reason, a lot of people who are being laid off are not showing up on the unemployment rolls. Well, in the most recent week, a bunch of them did, because the prior week was 209,000 first-time claims, which was a slight upward revision from 208,000 from the original report. For 200, and it came out at 231,000. So that was a big increase, not only over expectations, but over the prior month. It's one of the highest we've seen maybe in a couple of years. So that was a weak number. Surprisingly, the dollar didn't really sell off on that number. Gold had a big rally that day. I don't think it had anything to do with that number. The market kind of shrugged it off. But I think there should have been more attention paid to that number. And then on Friday, we got this consumer sentiment number. And this was a real shocker for people who were expecting relative, asymmetry between the prior month, which was 77.2, which is still not a great number. But the consensus was for 77, and it came out at 67.4. It's probably one of the biggest misses in the history of consumer sentiment as far as how far below the consensus this number came out. I mean, to give you an idea, the range of the estimate was a low of 74 and a high of 79.5. So we came in at 67.4, way below the lowest anybody expected this number to be. And one of the reasons that consumers are so pessimistic is because of inflation. And if you look at the year ahead inflation expectation number, which in the prior month was 3.2%. So that shows you that consumers who were surveyed expected inflation to be 3.2% over the next year, which is well above the Fed's so-called 2% target. Well, the most recent expectation rose. Consumers now expect 3.5% inflation over the next 12 months. Powell puts a lot of stock in expectations. Always talks about we have to make sure that the expectations remain anchored at 2%. Well, they're clearly not anchored at 2%. We're adrift. We just drifted from 3.2 to 3.5. What's Powell going to do about it? Nothing. Because another reason that the consumers were so pessimistic, it's not just because inflation is pushing up prices, but they're also worried and upset about high interest rates, high mortgage rates, high interest on their credit cards or auto loans, or maybe they had a home equity loan. Well, if Powell looks at these numbers and decides, well, we need to raise rates because consumers are worried and they're pessimistic about inflation, well, that's going to make the high interest rate problem worse. Consumers are upset about both high inflation and high interest rates. So, how is the Fed going to do something about that? Because if it raises interest rates, it's going to make that problem worse. And if it doesn't raise interest rates or cuts interest rates, it's going to make the inflation problem worse. So, there's really nothing the Fed could do about this, even if the Fed tried to do something. But it really should throw cold water on the narrative that there is no stagflation, because this is clearly evidence that that is the case and that the economy is a lot weaker than everybody claims it is. In particular, Joe Biden. I watched an interview of Joe Biden. This was on CNN, Aaron Burnett, and you really should watch this whole interview. It's about 17, 18 minutes long. And it's almost comical just looking at the expression on Biden's face as Aaron Burnett is reading off all these horrible economic statistics. And he's sitting there looking at her like he's like in shock, like that. Like he's hearing these numbers for the first time. I can't even believe that CNN, right? Normally they would be giving him softballs. I mean, at least Aaron Burnett, laid it out. She gave him some tough questions. Now, she didn't have tough follow-ups, so she kind of let him get away with these BS answers. But at least she asked some real questions. And then, he had to give these BS answers. But, when she asked him about the consumer and why families are feeling so bad and why things are so tough, his answer was, well, I don't understand how that could be. Everything is great. I don't believe all these numbers. She said, well, what are you going to do to turn this around? And his response was, it's already turned around. What are you talking about? Everything is great. Have you seen all these numbers? We got the strongest economy in the world. In the world, I'm telling you. Bragging. He talked about jobs. He says, I've created 15 million jobs since I became president. Me, Joe Biden, I've created them. I mean, he didn't create any jobs. How did he personally create those jobs? Like, he's taking credit for all of these jobs. And of course, the jobs are the jobs that were restored, the ones that he claims Trump lost. He said, Donald Trump's never created any jobs. I've created all these jobs. Those are the same jobs that were there when Trump was president. They just were furloughed temporarily due to COVID. And then Biden comes back into office and we recall all those workers. And now he claims credit as being this job creator. But the funniest thing was when he started talking about inflation, because Aaron Burnett is talking about how much prices have gone up. And Biden says, hey, wait a minute. I mean, inflation was 9% when I was elected. Look, it's all the way back down to 3%. It wasn't 9% when he was elected. It was still, 1 point something when he was elected. In fact, it was still below 2, I think, officially, when he took the oath of office. It didn't get up to 9% until he had been president for like a year and a half. But somehow he claims that it was 9% the day he started. And so supposedly he's already won on inflation. Because to him, it's down to 3%. Well, the 3% is already higher than it was when he came in. But all that 9%, and again, not that he's all completely responsible for it. In fact, I'm going to talk about that later when I talk about Trump's Wildwood, New Jersey speech. But he's trying to act as if he inherited that huge problem and he's already solved it. And, another thing that was funny about Biden when he was talking about inflation again, he immediately changed the subject to shrinkflation, and then started blaming greedy corporations. And he said, we have a problem of corporate greed. That's why everything is so expensive now. As if corporations weren't greedy until Joe Biden became president. All of a sudden, Biden's president and these corporations decide, let's stick it to the consumer. We can make some extra money if we really jack up the price of food. Like, where were all these greedy corporate officers a few years back? I mean, they weren't greedy. They were just being Mr. Nice Guy. And they were like, yeah, let's let the consumer have a break. Let's charge these low prices. And all of a sudden they were like, what are we doing? No more Mr. Nice Guy. Let's really screw these guys, right? And now Biden's like, yeah, that's what's happening. It's corporate greed, I tell you. Corporate greed is the problem. I understand that the consumer is upset about these greedy corporations gouging them with these price increases. But the reality is the corporate executives are no greedier now than they've been in the past. They're the same people. But what checks their greed is competition. They can't just jack up their price because their competitors might not do that. And then they're going to take their market share. And also, companies are looking for volume. And to do volume, you need to lower prices. And you can sell more stuff. And then you can make more money. So they're trying to maximize their profits, not maximize the price. And sometimes you make a bigger profit at a lower price. Now, what's changed is inflation. Inflation is driving up the cost of doing business. And so to stay in business, companies have no choice but to raise prices. And they're all raising prices because they're all facing rising costs. So it's not greed. It's got nothing to do with greed. In fact, and I pointed this out from the beginning, corporations were reluctant to raise prices originally because they were hoping it was transitory. They were being told it was transitory. So they didn't want to piss off their customers. So they just ate the cost increases. That's why a lot of those consumer type companies were originally taking some earnings hits because their costs were going up and they weren't raising prices. They were trying not to. Right? So not only weren't they being greedy, they were actually, sacrificing their own earnings not to raise prices. And, when Biden wants to make a big deal about shrinkflation says, they give you less for the same price. Yes, that's helping Joe Biden. That's helping to disguise the inflation problem. Yes, corporations are helping the government when they shrinkflate instead of inflate, right? Instead of raising prices, they reduce the quantity and they hope the consumer doesn't notice. The problem is they've been cutting down the quantity for so long that it's hard to miss it because you got these little tiny packages now. I know you open up a box of cereal and the cereal doesn't even start till 2/3 of the way down the box. I mean, I remember when I was a kid and we used to get cereal. And, when I was a kid, I chose my box of cereal based on whatever toy was in there, right? They would put a free toy in there. And so I'd want to buy that cereal to get that free toy, right? They'd put like a 20-cent toy in there. And all of a sudden, yeah, I got to have that, that box of cereal. But when we would come home, I would make my mother immediately open up the cereal that we bought and dump it out into these big bowls so I could get the prize. I didn't want to wait until I had eaten enough cereal because the box was filled to the top. It was all cereal. And I didn't want to wait, for I don't know how many days of eating cereal it would take before I finally got down to the toy. I had to have that toy right away. As soon as we got home from the supermarket, I wanted the toy out of the cereal box. So we would have to pour all this cereal out, get the toy, and then put the cereal back in the box, right? But now, I mean, I don't even think they put toys in there, but the toy would be just sitting right on top because the cereal doesn't start until 2/3 of the way down. Now, they are starting to shrink the boxes now so that the cereal boxes are even smaller too, because I guess they can't afford the cardboard, right? Everything is getting more expensive. And so they have to shrink the size of the box, not just give you less stuff inside the box. But all this is helping to hide inflation. But Biden is hiding behind it. He's trying to blame, right, inflation on corporate greed. And again, that is why the government and the media have changed the definition of inflation. So it's easier for the government to blame other people for the inflation that they create. Because if everybody knew that inflation was printing money, expanding the money supply, well, then they would know the cause. It's always government that causes inflation. We got a commercial break. We'll be right back, so stick around.
Here's some quick math. The less your business spends on operations, on multiple systems, on delivering your products or services, the more margin you have and the more money you keep. But with higher expenses on materials, employees, distribution, and borrowing, everything costs more. Headaches. Smart businesses are graduating to NetSuite by Oracle. NetSuite is the #1 cloud financial system, bringing accounting, financial management, inventory, HR into one platform and one source of truth. With NetSuite, you'll reduce IT costs because NetSuite lives in the cloud with no hardware requirement, access from anywhere. You cut the costs of maintaining multiple systems because you've got one unified business management suite. You improve efficiency by bringing all major business processes into one platform, slashing manual tasks and errors. Over 37,000 companies have already made the move. So do the math. See how you'll profit with NetSuite. By popular demand, NetSuite has extended its one-of-a-kind flexible finance program for a few more weeks. Head to netsuite.com/gold.
All right, I want to circle back and talk about the gold rally that we had. And we had a pretty good rally on Thursday, the day that we got the weekly unemployment numbers. And that was a very strong day also for the mining stocks. Many of these mining stocks hit 52-week highs finally on Thursday. We had some more on Friday, but the strength that we had in mining stocks on Thursday was not repeated on Friday. The stocks were relatively flat. I think the GDXJ actually finished slightly lower, though the GDX did make a new 52-week high on the day before finishing slightly lower. I don't think the GDXJ actually made a new high for the year yet. It still has a little bit to go. My guess would be it probably make a new high this week. But you know what happened on Friday was that gold was up over $30 early in the morning. Got up to maybe $32, $33 early in the morning. And so all these stocks kind of gapped up based on the strength in the gold. But then gold sold off. And it managed to close the day up $18, which is still, solid gain. $18 is a good day in gold. But again, the traders, there's still so much fear in the market that when gold sells off from up $30 to up $18, the gold stocks go negative. Oh my God, gold's going down, and people start selling these stocks. It doesn't matter if gold is up $18 or $30. These gold stocks are still so underpriced. They have a long way to go to catch up to a much lower gold price than the one we have right now. These stocks are priced for gold well below 2,000. So whether gold's 2,400, 2,300, doesn't even matter. The stocks should be rising. And eventually, that's what's going to happen. The mining stocks are going to shrug off declines in the price of gold, because investors are going to realize that even if the price declines, it's so high relative to what anybody expected the price to be when they were analyzing these stocks and estimating their earnings. Again, on Friday, IM Gold came out with an earnings beat. Again, everybody is surprised. Oh my God, a gold stock beat earnings. Well, maybe they're, obviously they're used to them missing earnings. That's been the standard operating procedure for these companies for years. They've been missing earnings. But now all of a sudden, they're beating. And IM Gold closed up, I think, about 12% on the day, new 52-week high. The stock closed at $4.30. The 52-week low is $1.99. So the stock is more than doubled from its 52-week low. But, you want to look at a stock like I Am Gold, which, by the way, we own that stock. I own it personally. I've owned it for years. And we own it in our value fund, right? So a value fund is a strategy, and my mutual fund that is not a gold strategy. It's value, but we see value in these gold stocks, and that's why we have an allocation. But if you want to look at where I Am Gold was in the past, back in 2011, when gold topped out at about 1900, I Am Gold was over $20 a share. So gold is like 20% higher than it was in 2011, yet I Am Gold is a fraction. $20 stock back then, and it's barely over $4. But the 52-week low was $2. It was 90% down from where it was. That's how cheap these stocks are. That's how much they've been beaten up over the years. And you look at the charts now, though. You look at a chart of gold and silver, look at a chart of these gold mining stocks. I mean, they're beautiful from a long perspective. I don't think I've ever seen in my investment career the fundamentals and the technicals looking so good for the metals and the mining stocks ever. So that's why I've been, so, insistent that people take advantage of the opportunity in both. And, looking at the stock market, sure, the Dow was up, the S&P was up on the week, but less than gold. I think the S&P was up maybe 1.8%. Dow, I think a little more than that, maybe 2. But gold was up 2.7% on the week. So what does that tell you? That tells you that stocks didn't go up, right? They went down if you price them in gold. And I think that's really going to be what's going to happen. One of the reasons I'm not short the stock market is because I think it's going to go higher. I think it may go lower first because it's so overpriced. And as the market has to absorb, some of these stagflation problems. But nominally, the market's going to go higher because of inflation. The price of everything is going to go up. But in real terms, stock prices are going to come down. And the way you can measure them in real terms is with gold, with real money. And so I think in the future, most of the time that the stock market is up, gold will be up more. And I think days when the stock market is down, gold could be up. Now, while I think gold will outperform the U.S. stock market, it may not outperform emerging markets. There are a lot of stocks that are cheap, not expensive like the ones in the U.S. So they may be able to do better than just gold and silver. But I think it'll be hard for any stocks to beat the performance of the gold mining stocks, because I think these stocks are just excessively cheap based on how long they were in a bear market and in investor sentiment and just how much confidence and faith, misplaced confidence, that investors have in the Fed. And when I talked about consumer confidence earlier in the podcast, if consumers actually realized how bad it's going to be, the numbers would be even lower. I mean, as bad as they think it's going to be, they think inflation is going to be 3.5%. They're wrong. It's going to be higher than that, right? So if they only knew, the numbers would be even lower, not only in these numbers, but in the polling numbers for Joe Biden. So the key is don't be, waiting for a big pullback. And I talked to the guys again at Schiff Gold, and they tell me that we still have a lot of people that don't want to buy yet. They want to buy a pullback. Don't wait for a pullback in gold. It's not worth it because it's not going to be big enough and it's not going to matter. Now, look, if you're a day trader, sure, you wait for a pullback if you're trying to trade. But if you're trading gold to buy and sell it, you don't want to buy physical gold. I mean, it doesn't make any sense. The costs are too high. If you want to day trade or even short-term trade gold, right, buy it and sell it in a few months, don't buy any physical gold. Don't call Schiff Gold for that. Just buy a GLD at a discount brokerage firm, right? Don't even call up the brokers at our brokers, because we'll charge a commission. If you just want to buy gold to trade it yourself, just go to one of these discount brokers that has no commission and just buy GLD, or open up a commodities account, buy gold futures or something, because the costs are a lot lower if you want to just trade. But if you want to own gold or silver, if you're buying it to keep it physical, then it doesn't matter. It doesn't matter whether you pay $2,400 an ounce or $2,300 an ounce or $2,200 an ounce. It doesn't matter. Right? When gold is at $10,000 an ounce, and I think it will go higher than that, but when it goes to $10,000 an ounce, is anyone going to care if they pay $2,400 or $2,300? No, it's not going to matter. You're not going to care. You're not going to be, crap, I could have bought my gold for $2,300 and I paid $2,400. You're not going to be upset that you paid $2,400 for your gold that's worth $10,000. You're going to be glad that you bought it. You know what will make you upset? If you didn't buy it because you were waiting for $2,300 and now it's $10,000 and you don't own it because you didn't want to pay $2,400. You were getting cute and you wanted to pay $2,300 and you didn't get it. So for $100, you missed out on $8,000 or whatever the gain is. So that's why if you're waiting for a pullback, just stop waiting, buy it, and if it pulls back, you're not going to care. Right? Again, gold's at $10,000. It's not going to bother you that after you bought it at $2,400, it went to $2,300 or $2,200. That won't bother you. What will bother you if you never buy it because you're waiting for a price, and then you're like really regretting it. And on these gold stocks, I think the same thing. It doesn't even matter. I mean, I'm not buying these stocks to trade out of them. I mean, if my gold stocks were to go up 50%, 100% in the next year, I wouldn't even be thinking about selling them because I don't even think that is close to where they're going. And I think that's just a small a step on this journey, because the gold stocks have a long way to go just to catch up to where they already should be. Forgetting about where they're going to be when the price of gold is much higher, they still need to go up a lot to get to where they should be based on the current price of gold. Anyway, let me take the second commercial break, and we'll be right back with a lot more of the podcast, so stick around.
In my early days, I faced a pivotal moment in my career. Instead of following the herd into traditional finance, I charted my own course. Despite skepticism, I founded my investment firm driven by a belief in economic truth and fiscal responsibility. Through perseverance, I established myself as a leading voice in finance, proving that sometimes blazing your own path is the best way to succeed. To get what you want, sometimes you have to challenge the status quo and blaze your own trail. That's what Harry's did. Seeing people tricked by expensive razors, Harry's took a stand. Instead of pricey options, they offer high-quality razors at a fraction of the cost. That's why when it comes to grooming my face, I use Harry's. Harry's understands the value of quality without breaking the bank. Their razors provide a smooth shave every time, and their shaving gel leaves my skin feeling refreshed and moisturized. So don't settle for the status quo. Blaze your own trail with Harry's. Get started with a $13 trial set for just $3 at harrys.com/gold. That's harrys.com/gold for a $3 trial set.
Okay. Hey, before I move forward with the podcast, so I don't forget, I want to remind everybody that I am going to be on the Real Estate Guys Investors Summit at Sea coming up next month in June. I think it's June 13th to the 23rd. So it's a 10-day event. There's 2 days on land in Fort Lauderdale. And then we take off for an 8-day cruise. I've been on a lot of these cruises. They're a lot of fun. My entire family is going to be there. So I'm bringing my wife, all 3 of my children, Spencer, who some of you might know about. I've talked about him quite often over the years on the podcast. He'll be there, my 2 younger children, and my mother. So speaking about Mother's Day, she's going to be joining us on the cruise. So it's a great time if you want to meet my family, learn a little bit about the real estate market. They also have a band. By the way, my wife sings in the band, so you can hear her do a little singing. But if you want to sign up for it, they still have some slots available. That's why they mentioned it to me. So I mentioned it on this podcast. So you just got to go to Real Estate Guys Investor Summit at Sea, and you can sign up for a slot. You get a cabin on the boat. It's a brand new celebrity boat. I forget, it's like, Bonvoy, or what's the name of it, but it's a new ship. So it's really beautiful. And I'm looking forward to being down there, and looking forward to seeing some of you on the Summit of Sea as well. Anyway, let me get back to the podcast. So I wanted to talk about an interview that kind of went viral along, on the internet. A lot of people were talking about it, and many of you may have already seen it. In fact, it came up. I did a podcast with David Lynn, and Professor Henke and I were in a bit of a debate. I agree with the professor on a lot of things. I watched, we put the video, the David Lynn podcast up on the website, and I read some of the comments. And, some people thought he won, some people thought I won, but there are a lot of people that, were saying some things not that kind about Professor Henke. I actually really like the guy. I've been following him for a long time. And, he gets a lot more stuff right than he gets wrong, right? Nobody's perfect. And it's possible that maybe I got some stuff wrong, but I don't think so. And I think that, he's more of an academic. But I think that there's very little that we actually disagree with. I mean, if we really had an opportunity to hash out some of these disagreements, and you could even see in the podcast, or towards the end, he's kind of acknowledging that some of the stuff I'm saying is correct. So maybe he's just, disagreeing on the timeline, the sequence of events of how it's all going to play out. But on that interview, David Lynn talked about and played this clip. And I'm gonna play the whole clip now. Jared Bernstein is the guy, and he was interviewed. I haven't seen the program yet. I've been meaning to watch it, but it's like a documentary on money or inflation or the Fed or something like that. And so this guy, Jared Bernstein, who's the chairman of the Council of Economic Advisors, is being interviewed. And by the way, if I was ever to be president of the United States, I would fire all of the economic advisors. I wouldn't even want any. I would just save the taxpayers the money and get rid of them all. We didn't even have the Presidential Council on Economic Advisors until 1946. That's when it started. President Truman started. So you may want to ask yourself, well, how did America make it for over 150 years? Right? We had 32 presidents who didn't have any economic advisors. Yet we did fine. We got to 1946. We went through the Second World War. I would argue that the economy did much better before presidents had any economic advice. Right? We had the Industrial Revolution, the most powerful economic growth in the history of America, where the living standards of people rose the most, was from about 1870 to about 1910, coincidentally before the Fed, right? We had the purest gold standard in American history. We had deflation the whole time, right? Falling prices. And that was the best we did. And there was no economic advisors telling the president what to do. The fact of the matter is the economic advisors have screwed everything up. They've given bad advice because they don't know what the hell they're talking about. And this clip of Gerard Bernstein, right, who is the chairman, he's just not on the council. I'm not even sure how many economists are on this council. I forget. There's a bunch of them. But this is the chairman. This is the top one. So this is supposedly the best we got, right? This is the greatest economic mind that our country has to offer, right? Who's now giving advice, right, to our president. And listen to this guy. I mean, I don't know whether you should be laughing or crying or getting annoyed or all three at the same time. But listen, roll the clip.
The U.S. government can't go bankrupt because we can print our own money. It obviously begs the question, why exactly are we borrowing in a currency that we print ourselves? I'm waiting for someone to stand up and say, why do we borrow our own currency in the first place?
Like you said, they print the dollar. So why does the government even borrow?
Well, again, some of this stuff gets, some of the language some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do? They sell bonds. Yeah, they sell bonds, right? Because they sell bonds and people buy the bonds and lend them the money. Yeah. So a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to I guess I can't really talk. I don't get it. I don't know what they're talking about. Like, cause it's like the government clearly prints money. It does it all the time, and it clearly borrows. Otherwise we wouldn't be having this debt and deficit conversation. So I don't think there's anything confusing there.
Got that? The government definitely prints money. He figured that part out. You know, I've seen that clip. I don't know how many times now, and I still laugh. It's funny every time I watch it. But again, it's not just funny. He is the top guy. He's giving Biden his advice. I don't know what we pay these clowns to be economic advisors, but again, you know, we're broke, right? The country doesn't have any money. So we got to find a way to save money. So we can start by getting rid of all these economic advisors because they don't do anything. They don't know anything. I mean, listen to this guy. I mean, first of all, he doesn't even know how to answer the question, right? The question is, why do we borrow money? Well, we could just print it. Why are we borrowing the money that we print, right? That's what she wants to know. We could just print money, so why borrow it? Let's just print it. Well, there's a reason for that, right? And, you know, I guess that no one on the chairman of economic advisors knows what it is. But this is why we do it. So when the government borrows money, the money supply doesn't go up because it's borrowing the money that's already there. And so that does not create inflation. Now, when the government borrows money, that money can't be borrowed by somebody else, right? So the government, with its perfect credit rating, is going to get the money, and therefore somebody else is not, right? Somebody that's less creditworthy than the government. And that may have been a business that may have used the money productively to grow the economy, to produce more, to create jobs, but they couldn't get the money because the government crowded them out, right? So you have that risk out there. The government sucks up a lot of the available credit, but it's not inflationary because the money supply hasn't grown, right? The government has borrowed it instead of somebody else, but the money's there. Now, if the government doesn't want to do that, if the government just prints money, then it has to increase the money supply. And then it spends that new money it printed into circulation and prices go up. So the answer to the question that was posed by the lady before Bernstein even showed his face, the answer to the question, why do we borrow in the currency we can print? It's to avoid inflation. That's why. Because if we just printed the money, we'd have inflation and prices would go up. And so that would be a bad thing. And so to avoid inflation, we borrow. Right? That's the answer that she was like looking for. So why can't anybody tell me this? Well, she's not asking the right people. See, the problem is she's asking people that work for government. She's asking the government's economists, the Council of Economic Advisors. Just ask me. You know, or there are a lot of people. Ask Professor Hankey. There are a lot of people that could tell her why we don't just print the money. But the other thing that I thought was pretty, funny about it is first, he doesn't even understand the difference between borrowing and lending. He says, well, we print up money and then we lend it out. No, we're borrowing. That's what we're doing. He says we're selling bonds and we're lending money. No, we're borrowing money. I mean, he eventually figured that out after a while. It's like, oh, yeah, I guess we're borrowing the money. Yes, the government is borrowing the money. They're not lending the money. Now, yes, the government does make some loans, right? We have government loans, right? Government loans money to students to go to school. So the government does sometimes print money and loan it out. But when he's talking about the bond market, the government is borrowing the money. The government is selling a bond. The person buying the bond is the one making the loan. Now, the question was, well, why do we do that? Because we're borrowing our own currency. We could just print it. Yes, we can just print it if we're willing to have inflation. But that's what we're doing. But it's not the government that's doing the printing. It's the Fed. And it's not literally printing it, right? It's creating it out of thin air by crediting the government's account on a computer. I mean, yes, there is some money being printed, but that money is actually, printed by the U.S. Treasury, right? They print the bills and they mint the coins. But the real money creation takes place at the Fed and through the banking system. But what does happen is the government runs deficits, and then it's the Fed that buys the bonds. So in that respect, we're not really borrowing. We're doing exactly what the lady said. We're not borrowing. When we're borrowing from the Fed, right, the government's borrowing from itself. And so it doesn't really count. And when we borrow from the Fed has to print money. And that's inflation. See, when the government borrows from the private sector or the government borrows from other governments, let's say the U.S. government sells bonds and the Chinese government buys the bonds. Well, that's not inflationary, at least not here. It might be inflationary in China because they may print yuan to buy the bonds, but it's not inflationary in America. Or if the German government buys the bonds, right? Or if any private individuals. The only time it's inflationary is when it's the Federal Reserve that buys the bonds. And that's what it was doing when it was doing quantitative easing, when it did QE1, when it did QE2, QE3, all that was the Fed buying the bonds and printing the money to pay for them. And that's why we've got all this inflation. And, by the way, I was listening to the former President Donald Trump. He gave a big speech in Wildwood, New Jersey. And, I spent a couple of summers, not whole summer. I used to have a good friend of mine that lived in Philadelphia when I lived in New York. And his parents had a beach house in Wildwood, New Jersey. So I used to go down there several summers and visit him and spend a week or two in Wildwood, New Jersey. I know it's changed a lot. I haven't been there in decades, but I had been there. And he had a big rally in Wildwood, New Jersey. And, one of the things that Trump was talking about was the inflation tax and how bad inflation is. And he was going over the staggering price increases since Biden has come into office. And of course, it's a great campaign issue, but he's blaming it all on Biden. It's not all Biden. A lot of the inflation that we're dealing with has its origins in Trump because huge deficit spending happened. All of the COVID stimulus money, the whole idea that people should stop working but spend more, that started with Trump. It just was expanded with Biden. And all of this operates with a lag. So there was a huge inflation tax when Trump was president. He was bragging during this speech about his huge tax cuts that were bigger than Ronald Reagan's. But the problem with these huge tax cuts is that they didn't come with huge spending cuts. They came with spending increases. So we substituted the income tax or the inflation tax for the income tax. So Donald Trump imposed an inflation tax. It's just that taxpayers didn't really feel the sting of that tax until Trump was no longer president. And now Biden is in office. And so it's the Trump inflation tax that's also a problem. It's not just the Biden tax. And by the way, one of the things that Donald Trump promised on that speech was more tax cuts. Reelect me, and I'm going to cut your taxes again. How are we going to do that? The deficits are huge. How are we going to have more tax cuts? We need spending cuts. Trump didn't talk about any spending cuts. All I heard him talk about is all the things we're not going to cut. Social Security, Medicare. I heard him talk about spending some other money on infrastructure or on, for the auto industry or things that the government was going to do. Nothing that the government was going to cut. Only thing going to be cut are taxes. Government's going to keep growing. Well, then inflation is going to keep growing. You can't talk about inflation and be critical of inflation unless you're going to propose real solutions. Now, I guess Donald Trump is a better politician than to want to propose real solutions because that's going to piss somebody off. No, he'd rather say Social Security is not going to get touched. Medicare is not going to get touched. And I'm going to cut your taxes. Well, that just means we're going to have a lot more inflation. And that's what I've been saying. Doesn't matter who wins. And I get a kick. Trump says that, Biden is the worst president in the history of the country. In fact, he said he's the worst president in the history of any country. Right? This is how he no. And he said you could take the 10 worst presidents ever, add them all up, and they're still not as bad as Joe Biden. Look, Biden is bad. He ain't that bad, right? He inherited a bad situation. Sure, he made it a little worse, but Donald Trump is exaggerating how bad Biden is. And he's also exaggerating how great he is because he says, we had the greatest country ever when I was president, and now it's the worst it's ever been. But if you just reelect me, well, the very next day, it's going to be the greatest again, right? The country doesn't go from being great to being horrible that quickly. It's the same country. It hasn't changed very much since Trump was there. Yes, some of the problems have gotten worse. They would have gotten worse if Trump was reelected. That is the reality, and when he gets elected, that's going to be a big problem because people maybe are going to think that things are going to magically get better, that there are problems. People are suffering. The problems are real. And again, Trump is tapping into it again. And Biden is in denial, saying everything is great. That is not a recipe to win re-election, not feeling the pain. Trump is going to say yes. In fact, he said he doesn't even buy certain food items anymore because the price has gone up, which, of course, is ridiculous. I mean, he buys whatever he wants. Doesn't matter to him, what food items cost, but he's feeling the pain. He's telling the voters, yeah, I can't afford to buy, whatever. I forget what it was he had to give up because the price was up, hamburgers or whatever. I forget. But Biden is living in denial. And so if you're in denial of somebody's problems, they know you're not going to solve them if people are looking for government to solve problems. So from a political standpoint, I mean, his speech is probably resonating with a lot of voters. But with me, it just, confirms what I'm saying is that we're screwed either way, right? Inflation is going to, ravage the country because that is the only politically viable path that anybody is going to go down, which is why we have to have the inflation hedges in place. You got to have, the gold and silver in your portfolio. You got to call up the guys at Schiff Gold. They're probably working again, even on Mother's Day. They're probably there. Our new site, we're gonna be debuting a new website soon. It's taken longer than I thought to get this thing finished, but it's going to allow for 24/7 buying of gold without having to talk to the guys at Schiff Gold, who are great guys, and a lot of people enjoy talking to them. But if you want to buy gold at 2 a.m. and there's nobody there, you'll be able to just go online, put some gold and silver into your shopping cart, and check out. Right? We haven't had that in the history of Schiff Gold. And also contact the guys over at Euro Pacific Asset Management to get a managed account set up before the bottom drops out of the dollar. which is going to happen. It's amazing that it hasn't. And before the gold stocks really take off, because we have these stocks in our strategies. And specifically, if you want to have a mining strategy, if you want to have a portfolio of mining stocks while they are still this cheap. I mentioned that you had that big rally in IM Gold on an earnings beat. Again, no, coattails. It wasn't like people said, oh, let's buy all the gold mining stocks. If this one is beating earnings, we got IM Gold beat earnings, we got Newmont beat earnings, we got Barrick beat earnings. No one seems to care, right? I mean, they're beating these numbers, and the beats are going to be even bigger, I think, next quarter, because the prices have gone even higher. In fact, I think that the second half of 2024 is going to be even better than the first half of 2024. And nobody has taken up their numbers. Anyway, I wanted to end the podcast, though, again, talking a little bit about Euro Pacific Bank. A number of the customers had gotten together. Again, remember, they hired a lawyer, and they've been trying to get their money back. It's been over 22 months, almost 23 months since the bank was unnecessarily and maybe even illegally put into receivership. And so about a dozen or so of the customers hired a lawyer, which includes the guy who committed suicide. And I didn't even realize he was only 61 years old. I thought he was older. He was same age as me, killed himself over this, right? But, there's about maybe if it's a dozen or 20 customers, but they were trying to get more because we have thousands of customers who have been needlessly inconvenienced for what amounted to a PR stunt. So if you go to my Twitter, and if you're not following me on Twitter, you got to go follow me on Twitter. But if you scroll down, I'm trying to scroll down. I tweeted this URL out, or not tweeted. I posted, to Elon Musk. I posted the link on my Twitter page. Yeah, it's europacific-customers.com. So one word, europacific-customers.com. And that's for the bank. And I guess there's a sign-up sheet. You can all get in touch with one another and try to do something. Look, I'm trying to do stuff on my own now. I mentioned on the podcast about my FOIA request and how heavily redacted it was. I'm now submitting my appeal to get the government to release all the documents that I think it illegally withheld from me, because I think those documents will prove a crime was committed. And of course, it makes perfect sense. I mean, because all of the actions by the regulators made no sense to me. Because again, I met with the commissioner of OSIF, the regulatory body, and introduced her to the company that was buying my bank, Quinta. And she loved the idea. She was thanking me I told them about all the capital they were going to put in. And I told them how they were going to be publicly traded. And she loved the idea. She said, this is great. It's going to have a second set of regulatory eyes. I told her I was going to own 4% of the company. She said, that's great. You can own more if you want. She said, Peter, I hope you don't leave Puerto Rico now that you've sold your bank. It was all going to be a formality. And before I left the room, I said to her, the bank is going to put in an extra $7 million in capital, Quinta. Do you want me to put that in now? I'll just write a check. I'll put the $7 million in today, and it'll be there right away. And then, when you approve the sale, I'll just have Quinta give me the $7 million instead of the bank, right? And and she said, no, you don't have to do that. Everything is fine. You're good. The bank is fine. You don't have to put any more capital in. It's fine the way it is. We leave the meeting. Everybody is all smiles, and we're all shaking hands. I was like, okay, I sold the bank. It's all over with. There's a new buyer. Great. And then, 8 months later, the bank is put into receivership. No warning. No. And then I find out with the FOIA request that a deal was reached with the IRS to shut down my bank over 3 months before they announced it to anybody, including the bank. And the pretext, they said, well, we're shutting this bank down because it doesn't have enough capital. Well, why doesn't it have enough capital? I offered to put in the capital, and she told me not to put it in. So here's the thing, though. If she decided 3 months before she shut down the bank for not having enough capital, that the bank didn't have enough capital and it was going to get shut down, why not tell the bank, hey, in 3 months, you're going to get shut down for not having enough capital. So maybe put the capital in now. And so you won't have to be shut down. She didn't say that because she wanted to shut the bank down. She didn't want the capital coming into the bank because then she couldn't shut it down for not having enough capital. She knew that I offered to put in capital, and she knew that I would put it in if she told me I needed to. She knew that Quinta was going to put in the capital if she approved the buy. So why didn't she approve the buy? There was no reason. You know what she did? She made up a reason. She said the reason that she didn't approve the buy was because I never told her that I was going to own 4% of Quinta. When I told her myself in a room full of people, and she said, that's fine, you can have more. But we also told her in writing, even before we had that meeting, we sent her the term sheet and we sent her the actual purchase and sale agreement and a summary. And on the very top of the first page, stock deal. Peter Schiff is getting stock. In fact, I told her in the meeting, the reason I was taking stock was because I wanted the company that was buying the bank to put the cash in the bank instead of into my pocket, because I knew the bank needed capital. So I took stock so that the bank could have cash, and she thanked me for that. She said, I really appreciate that you were willing to do that, right? You're letting the bank have the money, and I'm taking stock, right? So she knew it, but then she made up a lie and said, we're shutting that. We didn't approve the sale because they never told me about this 4%, which was a lie. But why lie? Why not just approve the sale? Again, I found that out. It was all because she wanted to give an anniversary gift to the J5. The J5 wanted to shut down my bank to commemorate their 4-year anniversary. That's why they waited 3 months to shut down the bank. They were waiting for the anniversary of the J5. Clearly, it wasn't an emergency. And here's the irony of it for all the customers. Let's say that the regulators knew they were going to shut down my bank in 3 months and put it in receivership. She could have announced that so that my customers could have taken out their money before then, right? If she would have come to me and said, Peter, we're shutting down your bank in 3 months because you don't have enough capital, I could have said, okay, I'll put the capital in. And then she would have said, no, we're not going to give you a chance to put the capital in. You don't have enough capital, so we're going to shut you down 3 months from now. I guess I would have said, okay. I would have sent all the customers their money back. So they never would have been trapped. The money was all there. Why wait for a receiver to take it over and screw it all up? And of course, here's the irony. After about half the customers took out their money, it wouldn't be undercapitalized anymore, because the capital requirement is a function of deposits. So as we were sending the deposits home, all of a sudden the bank wouldn't be undercapitalized anymore because we had a great balance sheet. Because these laws were written for banks that make loans. My bank made no loans. All the cash was there. I mean, why would you put a bank, and I was saying this at the time, why do you take a bank that has no debt, no loans, no past due bills, and cash? Why do you put that bank into receivership? Just suspend the license. If they would have said, Peter, you don't have a banking license anymore, you can't do business, I would have said, okay, and I would have sent everybody their money back, and all the customers would have had their money 2 years ago. Why take a bank like that and put it into a bankruptcy situation, which is for banks that have a lot of bad debt that you don't really know what they've got? You can't send the money back to the customers because the banks don't have it, right? They have a bunch of bad loans that have to be liquidated. No, the only reason my bank was put into receivership was to make it look bad. That's what the J5 wanted. They didn't want my bank to just close. They wanted it in receivership. They wanted a cease and desist. They wanted my bank to look as bad as possible. That's why the commissioner told these lies about the bank having a long history of noncompliance. We didn't have any long history of anything because we only had one audit in the entire time we were in the bank, and that was in Puerto Rico, and that was less than a year before the commissioner shut it down. But during that year, we complied with everything. We did every single thing that the regulators asked us to do. So the only history we had was one of compliance. We were a highly compliant bank. Yes, they did find some issues with our first audit. We had been operating in Puerto Rico for 3 years without an audit. And for all 3 of those years, we reached out to the regulators and said, please audit us. We want to make sure we're doing everything right. We're a new bank. We just got here. Please audit us. You're supposed to audit us every year, and we're overdue. Right? They didn't audit us until after the 60 Minutes broadcast came out accusing us of money laundering and tax evasion. That finally prompted them to audit us. But there was no evidence of money laundering and tax evasion. I just read an article about another Puerto Rican bank that's suing the Fed for canceling their account because of money laundering or allegations of money laundering or suspicions of money laundering. Well, the Fed canceled our account, but not because of any money laundering, because we didn't have our independent audit finished on time. Why? Because the bank's auditor quit after the bank was accused of money laundering and tax evasion. And so that's where we ended up losing our account. And by the way, just last week, the commissioner of Puerto Rico, OSIF, announced that there's another bank in Puerto Rico that doesn't have enough capital and that is going to have to go into voluntary liquidation if they don't raise the capital. So this bank that doesn't have enough capital, the way my bank didn't have enough capital, the government said, hey, you don't have enough capital, so you need to raise some more capital. And if we don't, we're going to shut you down. That's not what happened with my bank. They said, your bank doesn't have enough capital, you're shut down. You have no opportunity to add the capital. Even though you offered to put it in and I told you not to, I still am shutting down your bank for not having enough capital. Oh, and by the way, I'm fining you almost $1 million for not having enough capital for all these months. Because I met with her in November of 2021, offered to put in $7 million of capital. She says, don't do it. Then in June of 2022, she goes back and says, you know what? Since January of 2022, you haven't had enough capital. I'm going to fine you $5,000 a day for not having enough capital. Well, you would think, hey, I just told Peter Schiff not to put any capital in the bank, and now I'm going to fine him $5,000 a day for not having enough capital. Why wouldn't she say, hey, Peter, you remember you offered to put in $7 million of capital, you should put it in, because if you don't, I'm going to fine you $5,000 a day. No, she doesn't even tell us about the fine until it's too late, right? But again, all of this was a PR stunt. It was all done. No one cared about my bank's customers. You guys have a right to be pissed off because you were just sacrificed. You were collateral damage. The goal was to make a failed investigation look like a success. A grand jury, a federal grand jury convened in Sacramento, examined my bank for 2 years and found nothing. They went through thousands of accounts with a magnifying glass. Found absolutely nothing. And the IRS and the J5 were so pissed off because they made a big deal about this investigation. They told the New York Times, oh, we got a big one here. They told the Australian media, 60 Minutes, and nothing happened. It was a big waste of taxpayer money. They found absolutely nothing. But, oh no, we can't just allow this innocent bank to just get away with being innocent to save face. We need to put this bank out of business so we can pretend it was guilty of the crimes that we know it didn't commit. And so that's why the bank was put into receivership. That's why the sale was denied. Had nothing to do with any of the official reasons that were given. That was all BS. And none of them made any sense to me from day one until I found out for sure in my FOIA request that didn't even give me. Wait till I get all the information from the government. I'll have even more evidence of criminality. But the customers, again, should do what they can. I mean, I really don't have any authority anymore because the bank itself is being run by the receiver that OSIF appointed. And he's probably more loyal to OSIF than the customers, but we'll see. I mean, we'll see. Maybe he'll do something. But I can't do anything because I don't have any power over the bank. The receiver calls all the shots when it comes to the bank. But the customers are banding together to try to do what they can to accelerate the return of their money. I don't know when they're going to get it back. I mean, it's going to be 2 years in June 30th. That will be 2 full years when, again, I could have sent all the money back. And again, the only reason that the money didn't get sent back, 3 months after they shut down the bank, was because the Portuguese government froze the account for 8 months. Why did they do that? Because the PR stunt worked. The whole purpose of shutting down my bank and having a press conference was to send the fake message to the world that the bank was being shut down for money laundering or tax evasion so that the J5 could celebrate their anniversary and so the IRS agents could pretend that their failed investigation was a success, right? This whole PR stunt meant to falsely portray an innocent bank guilty, and it worked because the Portuguese government, when they read all the stories about my bank being shut down for money laundering and tax evasion, they're like, oh my God, and the money's here in Portugal, we better freeze it. And so it was frozen there for 8 months. Now, of course, it's been unfrozen for a year, but during the 8 months, so many things happened that the bank basically lost the ability to send the money back. And the receiver, who has no banking experience, didn't know what the hell to do because he doesn't know anything about banking. And so that's it. So everybody is stuck. But all of this mess was created illegally, I think, by these politicians, government officials colluding with one another, and not just in the U.S. This is international. This involves the British HR, His Majesty's Revenue Service in the UK and in Australia, right? Those were the 3 nations that all came together to basically frame an innocent bank. And in the process, you've got thousands of innocent customers who are collateral damage. Anyway, that's it for today's podcast. Remember, give us a thumbs up, like, comment, subscribe, all that good stuff. And I'll see you on the next podcast. Bye for now.